A very happy day to all of you. In this video, I'm going to discuss about the recent changes in the income tax law with regard to TDS and TCS. This video is intended for those people who are working in the accounts department and who are not great experts in dealing with income tax matters. I'm not going to discuss anything about any complications in this TDS, TCS provisions, interpretation, and all those issues. This is going to be a very basic understanding of the recent changes that have been introduced. First of all, we should know what is TDS and what is TCS. TDS is a tax deduction at source, whereas TCS is a tax collection at source. So these are all certain measures to track the various transactions, whether everybody is filing their returns properly. So this is a tracking mechanism. This is not a revenue generating mechanism. This is mainly these two things, TDS and TCS, are used as a tracking mechanism. TDS will be applicable in the hands of a person who is making certain payments. So I receive some services from somebody. I'm going to make a payment to the service provider. So I have to deduct some tax and pay it to the account of the person who has provided me the services. Originally, TDS was there mainly for services only, various types of services. So whoever is making a payment, instead of making full payment against the bill, deduct a tax. The tax is the future tax liability of the supplier. So I will pay it to his account and it will reflect in his income tax portal. When he files his IT return, whatever is his tax liability, whatever TDS has been deducted, he will claim a set off and he will pay the balance amount of tax, or if the tax liability is less, he will claim the refund. So by this TDS mechanism, the government can track the people to whom various payments are made, whether they are filing their returns properly, whether they are showing their income properly in their IT returns. For example, I am making a payment to a person by name A, and I am deducting TDS and I am paying it into his account. So I have made a payment of total 10 lakhs. So this 10 lakhs should be declared as an income by that particular A in his income tax return. So that tracking will be possible by this TDS mechanism. Later, another mechanism has been introduced, which is tax collection at source. Here, the responsibility for tax collection at source is on the person who will be receiving the payment. TDS is on the person who is making the payment for certain transactions, and TCS is the responsibility of the person who is collecting various amounts. Section 192, 194 and all, it deals with various types of TDS. 206C of Income Tax Act deals with various TCS. So there were certain TDS for quite some time, like whenever a seller is selling a product like alcoholic liquor for human consumption, or a motor car, or tendu leaves, or certain mineral products like coal and lignite, the seller, whenever he is collecting any amount from his buyers, he has to additionally collect some amount towards the tax. A specified percentage of the sale proceeds has to be collected by way of a tax, and that has to be remitted into the account of the buyer. The seller will be collecting it and it will pay it to the accounts of the buyer. So when the buyer, when he files his income tax return, he will declare all this income. Whatever tax has been collected by his seller, he will claim set off in his return. So this is also another mechanism to track the movements. Whether, suppose I buy large quantity of these goods or I buy a car, so I should have enough financial resources for me to buy the car. So when I buy the car, the seller will collect the TDS and he will remit it into my account. So when I file my return, the department will be in a position to know that I have made a purchase of the car, whether my income justifies the purchase of the car or not. So that is the purpose of TDS. So we have two things called TDS and TCS. So last October, that is 1st October 2020, a subclass 1H has been introduced under section 206C. This is another new type of tax collection at source. It expanded the scope of TCS under the income tax. So by way, earlier TCS was applicable only for certain goods like motor car with a value of more than 10 lakhs or alcoholic liquor like that. But this 206C1H is a universal provision. This will apply for sale of all goods in the hands of sellers. There is certain qualification to attract the provisions of this particular section, this particular TCS. The turnover, the total turnover of the seller should be more than 10 crore. Then he is covered under this particular section. He has to deduct it, he has to collect tax in certain specified type of cases. So this provision will be applicable in the hands of the seller whose turnover is more than 10 crore in the previous financial year. And whether he has to collect the tax from all his buyers? No. So in the current year, wherever a particular buyer has purchased goods worth more than 50 lakhs from this seller, more than 50 lakhs from this seller, on the amount exceeding that 50 lakhs, on the amount exceeding that 50, suppose he has purchased for 55 lakhs, on the 5 lakhs, the TDS has to be deducted. It was 0.1% TCS, sorry, the tax collection. The seller has to collect additionally over and above the sale price, including GST. He has to collect, there was a circular saying that TCS is over and above TCS. So 0.1% of the amount exceeding 50 lakhs from each of the buyer has to be collected, and the seller has to deposit this TCS into the respective accounts of all those buyers. This is 206C1H, which came into effect from 1st October 2020. Recently, in the last budget, another new TDS provision has been introduced. That is 194Q. A new section 194Q has been introduced, which is going to come into effect from 1st July 2021. This is a TDS provision. What we have seen under 206C1H is a TCS provision applicable in the hands of the seller. And 194Q is a TDS provision similar to TCS provision, but this will be applicable in the hands of the buyer. So here, if the buyer, whoever buys any goods, their turnover in the preceding financial year is, if it is more than 10 crore, then whenever they are making payment, they are purchasing goods from any seller, whenever they are purchasing any goods from any seller, if the value of that purchase from that particular seller exceeds 50 lakhs, the buyer has to deduct the TDS. So when he is making the payment towards his purchase to the seller, he has to deduct the TDS at 0.1% and remit it to the account of the seller. Now, you will observe this 206C1H and 194Q are both are like two sides of the same coin. So this will apply in the hands of the seller with the similar conditions, and this will apply in the hands of the buyer with the similar conditions. So whether a single transaction will attract both TDS and TCS. So that is one important question which we have to see. For that, the 194Q says, if any other TDS, there are various other TDS provisions available. If any other TDS is applicable, then the TDS under 194Q will not apply. Even though the person satisfies the condition, his turnover is more than 10 crore and his purchase value from one particular seller is more than 50 lakhs. But for that particular transaction, if any other TDS is applicable, then 194Q will not apply. This is first thing. Second, as I said, TCS provisions are contained in 206C, like alcoholic liquor, motor car, and all that. And there is one special TCS which was introduced, subclass 1H from 1st October 2020, about which we have seen. So there are two types of TCS. One is the existing TCS for certain transactions, and the TCS, new TCS, which was introduced from 1st October 2020, which is applicable in all cases of sales in certain specified cases. The seller turnover more than 10 crore and the sale value to a particular buyer is more than 50 lakhs. Now, if any of the normal TCS provisions are applicable, not the 1H, if any of the normal TCS provisions are applicable, for the same case, TDS under 194Q will not apply. The new TDS, which is going to come into effect from 1st July 2021, will not apply if the same transaction is liable for TCS in the hands of the buyer under any of the existing TCS provisions except 1H. Now, if for a transaction, both 206C 1H TCS is also applicable and 194Q TDS is also applicable. When this will arise, the seller is also having more than 10 crore turnover, buyer is also having more than 10 crore turnover. And the seller is making a sale of more than worth rupees 50 lakhs to the particular buyer, and the buyer is making a purchase of more than 50 lakhs from that particular seller. So, prima facie, both the provisions will apply. TCS also will apply, TDS also will apply for the same transaction. To avoid this, they have said, wherever both these provisions are applicable, only 194Q will prevail. That is, TDS will prevail. TCS under 1H, 206C 1H will not apply. So we have to carefully note, if any of the normal TDS provisions are applicable, the special TDS 194Q, which has now come, will not apply. The second thumb rule, if any of the existing TCS provisions are applicable, then 194Q TDS provision will not apply. If a particular transaction attracts both TDS under 194Q in the hands of the buyer as well as TCS in the hands of the seller under section 206C 1H, then TCS in the hands of the seller will not apply, only TDS in the hands of the buyer will apply. So these are all the recent changes in the provisions relating to TDS and TCS. And one more information, if these provisions also contain, if the buyer or the seller on whose behalf the tax collection at source is done or TDS is being deducted, if they don't give their PAN number, then a higher rate will apply. So normally if it is 0.1%, a higher rate of TDS or TCS will apply if the other person refuses to give his PAN number or is not having the PAN number. That is one thing. Second, another certain new provisions have come into effect, that is section 206AB. 206AB says, wherever TDS is applicable, including this 194Q, if the other person, TDS will apply in the hands of the person who is making the payment, So the person receiving the payment, that is on whose behalf the tax is deducted at source, if he has not filed his income tax returns for the 2 preceding financial years, for which the due date is already over. Today I have to decide whether I have to deduct TDS or not, at what rate. On this date, the seller or the service provider, they should have filed the income tax returns for which the due dates are already over, 2 previous years. If they have not filed their returns, then instead of this 0.1% or whatever percentage is applicable, I have to deduct the tax at the rate of 5%. So this is one part of it. Second, similar section for TCS also, another section 206C has been introduced, whereby if I am a seller, I am supposed to collect TCS. My buyer should have filed his IT returns for the last 2 preceding financial years for which the due date is already over. If he has not filed the returns for the 2 preceding financial years, instead of deducting TCS at whatever rate has been prescribed, 0.1% or whatever, I have to deduct tax at the rate of 5%. So these are 2 new provisions. Because of this only, all of you might have been receiving mails from all your customers and suppliers. Have you filed your income tax return for the last 2 years? Give your return copy, give your acknowledgement number and all that. Now recently the CBDT has also issued a circular. You need not trouble all the assessees for this purpose. We have made enough provisions in the income tax portal through which you will be in a position to find out whether your seller or your buyer has filed the previous 2 returns or not. So we are to see how this particular portal is working, how effectively it is giving the information. We are yet to see. So now, once we see these provisions, a TDS provision which was mainly introduced as a tax tracking measure is assuming more and more importance, and TCS is also become another tool, and the spread, the applicability of the TDS and TCS is expanding, and it by itself it is become tax revenue kind of mobilization. So what was introduced as a tracking mechanism has now become a revenue generation mechanism. And at the end of the day, the compliance burden is increasing day by day. So I hope that this particular video would have been very helpful for you to just understand the new TDS and TCS provisions. As I said in the beginning, I am not dealing with any of the complicated issues. There are various issues arising in the implementation of TDS, TCS, where it will apply, where it will not apply, the computation of the amount, all those things. I'm not going into all those aspects in this video. Thank you for listening.